Good morning and welcome to my daily reports market analysis videos with me, Richard Perry, market analyst at Hantec on Monday the 10th of February. A bit of a quiet open today, nothing too significant in terms of direction, and perhaps that's a positive actually, given the fact that we saw quite a sharp sell-off into the close on Friday. It seems as though that there's a mild settling of sentiment. There was a suggestion in over the weekend that perhaps, and I sort of use that word advisedly, perhaps there's a slight slowing of the coronavirus in China, whereby the number of new cases was less than 3,000 on one of the days over the weekend, and it's sort of a suggestion that perhaps you're not a million miles away from the peaking of the virus, but still no real confirmation yet officially, and obviously one day does not necessarily make a complete turnaround in the trend. So still very cautious, and I think the market moves are reflecting that today. Sort of mixed outlook in terms of risk. You saw initially a bit of a pop higher to the upside on Treasury yields. That's slightly back lower now. The 10-year Treasury yield was about 2 or 3 basis points up earlier. It's now sort of flat to slightly lower. Similar moves on at the 2-year. So those initial moves of a potential recovery have just sort of slipped back again. In terms of Forex though, there's a very slight risk positive bias. The yen is an underperformer, the sterling's higher, euro's higher, the Aussie dollar is the main outperformer. So that would tend to sort of lean towards a more positive risk appetite. But you could argue also that's balanced by the fact that gold is also higher, and gold being higher tends to come when obviously the more of a safe haven flow. So sort of mixed messages coming out of this session early on at the moment. Equities are still lower because they're playing a bit of catch up, considering the late sort of move to the downside on Wall Street on Friday. So some early sort of mixed signals that we're taking out from today's session. And to be honest, if you look at the calendar today, there's not a great deal to really change that. We had early morning today the Chinese inflation data that actually was slightly higher on the CPI, so perhaps that's allowed the Chinese yuan a degree of support. Let me show you the yuan, which has fallen back underneath that 7.00 level against the US dollar, so strengthening Chinese yuan there. But to be honest, I think it's a fairly mixed outlook that we're seeing and being met with today. Nothing changing on the economic announcements. Bit of Fed speak today. Michelle Bowman and Patrick Harker, both very, very slightly leaning on the hawkish side, but they are both voters. But we're not expecting too many surprises out from those two. And that takes me on to my chart of the day, which is the Aussie yen. Now, I quite often like to look at Aussie yen because I think it's a good depiction of risk appetite, and what we saw on Friday, sharp move to the downside on that Aussie yen, but subsequently a little bit of a rebound today on this early pickup, mild pickup on risk appetite, but nothing really doing yet. But look at the breakdown. We saw back underneath 73.35 on a decisive way, and also looking at this downtrend that's now reaffirmed on a 3.5 week basis. It certainly looks as though that the market is sort of positioning still to sell near-term strength, and you can see that where the momentum indicators RSI sort of stuck underneath that neutral point. MACD lines looked to be recovering, but that's tailed off, as have the stochastics. So it just has the feeling of a market that is going to be selling into strength. And you've got 73.35 up towards 73.75, the old overhead supply from these lows from December, January. That's a basis of support, and you'd only really see the bulls back in control of this above 74.40, which was last week's high. So I think you'd be looking at selling into strength at the moment for near-term positions back towards 72.40. Seems to be a likely test, I think, on this one. And let me just reset that. Zoom out. You can see that this is still a very mixed outlook, and with these moving averages rolling over, trading underneath the moving averages, I think having a mildly negative bias on Aussie yen looks to be the way to play this. Let's have a look at the hourly chart. Yeah, mixed messages, I suppose, but the failure at under 60 again. MACD lines just beginning to roll over, as are stochastics. It suggests that little rally that we saw early morning today could already be dissipating. So be careful of that. Even on the hourly chart, there's a slight sort of pivot line around that 73.60, 73.65 area. So resistance starting to build up again on this Aussie yen. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.